All right. What is up, Tycoons? Super excited for today's video. We're looking at MOVR. Okay, this is Moonriver. This one was a viewer request. So if you got any requests for a specific crypto stock, anything like that, you'd like me to chart up for you, make sure to let me know in the comments below. All right. The more specific you are, the more specific I can make the video to your needs. All right. We're going to break down the overall history. We're going to go over some chart patterns and how you can use chart patterns to help predict the future price, right? Whether it's going to go up, whether it's going to go down. And also, it can help you out using the relative strength index. Okay, that's what we have down here, the RSI. If you're able to spot some divergences between the price of the token, all right, and the relative strength index, that also is a good indicator you can use for potential bullish or bearish activity. All right, so I just need you guys to like, comment, subscribe, and I'm gonna get straight into it. Okay. So we're going to break down some of the from the past, okay? Some of the simple patterns, all right? Here we had a nice bull flag, okay? I didn't really chart that one out, and we came up, all right? The first pattern I want to show you guys is a wedge, okay? Now this is a descending wedge, and notice the pattern. We're bouncing, okay? It is going downwards, but it's actually a bullish pattern, okay? So once you break this trend line here, you get the nice move to the upside, all right? So your wedge patterns, right? You're looking for this to happen, all right? And that's what happened, right? We got the breakout all the way up to here, okay? And then look at the next pattern we have here. It's a bear flag, okay? So not a bull flag, but a bear flag, right? And this is pretty much a large time frame bear flag. And look exactly where it brings us down to, right? Where the target is for this. It's right at our major support level, okay? So if we zoom in a little bit more, we can see that this is the bottom level, right? This is the lowest the price has been on the chart, right around 475, okay? If this bear flag, all right, from last year, okay, this is like November, December, that time period, if this bear flag does play out, we're going to most likely come back and retest the support levels at 475, okay? So, what does that mean for you, right? Does it mean that you need to panic right now? Does it mean you need to, get ready to load the boat at these price levels? Well, we still have some patterns, okay, in here in the future that are pretty relevant. All right, I just want to show that slowly but surely we are coming down and really trying to hit this blue level, okay? So, if there was to be a bottom, I would say that this, could be a potential bottom, that 475 level, as it is our previous low, it is our bottom previously in the past. We may come and retest those levels, all right? Now it's not guaranteed, okay? We'll zoom into the chart a little bit more up here, and we could go up, we could recover, all right? One of the main reasons, all right, is the divergence I was speaking of, right? So, if you come over here, we can see that we have a low, right? Okay, you see that low, and look at our relative strength index. We have a low right here, okay? That's our lowest low on the relative strength index, right? Now look at where the price is now. The price is all the way over here, okay? And look at our RSI, way up, okay? So this has started to form a bullish divergence, right? And it's building up to suggest that we may have some bullish activity in the future, okay? So you got to keep that in mind when looking at this, right? Like, yeah, we do, we do have this old bearish pattern that has this price target down here. But since then, since we've gotten the breakdown from this, what we've done is we've started building relative strength, right? So the price all the way down here at these levels is much stronger than the price was up here in the 80s, right? So that's what I want to symbolize to you guys, okay? And just keep an eye out for that. Now, the next pattern we look at, okay, is going to be another wedge, right? We've got ourselves another wedge pattern here, right? Now, this one is an ascending wedge. So this one's going up, right? So we're zigzagging upwards, 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 and we're expecting the move to the downside, right? And sure enough, we get it and we hit right there, okay? So we went over a, descending wedge, a falling wedge, right? We went over a rising wedge. We went over bear flags, okay? The next pattern that we had on the chart that was easy to spot out was a head and shoulders, right? And a head and shoulders is signified, by obviously the head, the left shoulder, and the right shoulder, right? So here we have our left shoulder, we have our head, and we have our right shoulder, okay? And that move completely played out. We ended up coming back down to the lows of the head and shoulders, right? And in that process, what are we doing, right? We're creating much smaller patterns now. All right, and it's again, it's that bear flag. All right, and bear flags are honestly one of the most common patterns that you'll find in pretty much in all the markets, right? You'll find these bear flags where you have a sharp move down, and then you have a consolidation period, and then you extend that move, right? So what you do is you just duplicate your drawing, right? You have your sharp move down. Okay, we saw our move down. That was actually the right leg of this head and shoulders. Okay, and that formed another pattern right here with the bear flag, where we consolidate sideways a little bit, tries to recover, and then breaks down. Okay, so you duplicate your drawing and then you put it here at the top of your bear flag, and it will give you the bear flag price targets. Okay, and sure enough, what do? We come down, we hit those bear flag targets, and look at what we've done again. We created another bear flag. Okay, where we came down, we're consolidating sideways, and if we did break below this level already, but if it was to play out, look at where it takes us, to that 475. Okay, so we have a smaller bear flag right here taking us down to that 475 level. Okay, and then we've got the much larger bear flag over here trying to take us down to that 475 level. Okay, that we looked at earlier. Here's that bear flag, right? We have a much smaller one right here trying to propel us there, but we have these two trend lines here that have been holding us up. Okay, we've got this trend line right here, right, and we've got this trend line right here. We have a nice little triangle pattern forming. Okay, now in between this triangle pattern forming, we did get a nice head and shoulders. Okay, again, we got your left shoulder here, your head, okay, and then your right shoulder right there. Okay, and that one played out very nicely. Okay, but we're holding this trend line. So once we break this trend line, we need to figure out where our support levels are going to be, right? Because right now, as of now, things look pretty good, right? We've had 1, 2, 3, 4 bullish days in a row, all right? And things look good that we could try to come back up, all right, to, these levels right around 16, 18. We could be trying to head back up to there to test this trend line, right? And we've tested it one time before, all right? The more times you test something, the weaker it gets. So if we come up here, test it, and then bounce back down, come through here, test it, and bounce back down, one of these lines is going to have to break from testing it so much. It's either going to be this line here, and we're going to move back to the downside, or it's going to break through this line here and move to the upside. Now, historically, okay, September and October have been the worst months in the stock market. Why the heck do you care about stocks if this is a cryptocurrency? Well, crypto trades and correlates to the NASDAQ very well. Okay, it has been for the past year or two. So if the NASDAQ is expected to have really bad months, okay, then you could expect, all right, it's not guaranteed, you could expect that September and October would be rough as well for the cryptocurrency market, as we know that there's a correlation between the NASDAQ and cryptocurrency. Okay, so you got to keep that in mind, kind of keep that in your time frame. But one good thing, okay, is that historically, November to June, every midterm election year, right? And we're in a midterm election year, every November to June has been green, okay, in the stock market. So that may also correlate into cryptocurrency, where, September and October are a little rough, a little choppy, right? And then November to June, we see a nice green period. Okay, so those are two things that I'm on the lookout for, not financial advice, just some data that you can go and research and look up on your own, that is, very efficient and helpful to pay attention to. All right, so let's get some price targets on here. Okay, guys, we're going to use our Fibonacci tool right here. All right, and what I'm going to do is I'm going to take the swing low from here of that trend line up to this swing high right about here. Okay, so now we'll drag this over here. Okay, and we've got some price levels below now. Okay, so we've got a major support level at 977. Okay, we've got one at 6.4, and then look right here at our blue line. Okay, guys, the Fibonacci's is a math formula, okay, that's going to give you price targets. Okay, now these formulas exist in the stock market. They work on cryptocurrencies. They exist all throughout nature in real life. Okay, so not only did I draw this one with the naked hand, right, just from looking, and we saw previously over here in the past, right, that's the bottom, that's our level. Look at where the fibs have a price target, right at our level there. Okay, so really, really crucial level. If we do get the breakdown and break below 9.77, 6.4, 4.6, 4.75 area. Those are going to be your next two support levels below 972. All right. Or I'm sorry, 977. And what we'll do is we'll get the price targets to the upside as well. Okay. And do the same thing where instead of taking our swing low to our swing high to find the price targets below, all right, we're going to take our swing high from here down to the swing lows, and it's going to give us our price targets. Okay. So I'm going to draw it over here, and we're going to make sure it lines up with that bottom there. Okay. Just so we can see in the future some of the price action. All right. So if we are able to break past this trend line, 2201 is going to be really our breakout level. Okay. So above 2201. All right. Because what can happen, right, is again, we can zigzag in through here. Let's say we get the breakout to the upside, but what happens if it gets rejected here, right? Then that was just a false breakout, look above and fail, and we come back down. I'm not saying that's going to happen, but you know, you want to enter into things with a game plan, right? And you want to enter into trades with a game plan. So if you are catching the breakout of this trend line, this right here is an area where you can start to take profit. Okay, $22. And once you take profit from there, now you have done what's known as secured the bag. Okay, you've protected the trade, and you can leave half of the trade in there. You can leave 10% of the trade in there, and above 22, okay, you can look to start taking profits at 25, 27, and 29. All right. So those are basically all of the levels that I'm watching currently, all of the patterns that I'm watching currently. Let me know if you like the video, okay? Try to make some good stuff for you guys, try to make things clear, a little bit educational, a little bit informative, and yeah, I do those viewer requests every week. So if you want to see your crypto, your stock in the next video, comment down below.